It is easier to take a continuation trade than to take a reversal trade. This video will cover trade continuation model. In order to easily trade this model, you have to consider this time frame, the daily time frame, the 1 hour time frame, and the 5 minutes time frame. Now, on the daily time frame, you have to understand the overall direction of the market. Now, this is Euro USD and we are on the daily time frame. So the overall direction of the market is bullish. Reason because we see this expansion and then we have this retracement, and price is finding support at this change in the state of delivery. Now we see another expansion bullish. But let me show you something spectacular about the continuation pattern. For us to understand how to take a continuation pattern, we need to understand the difference between continuation pattern and reversal pattern. Here is a continuation pattern. Let's assume these candles are on the daily time frame, because we said that we are going to start from the daily candle. Now we have this daily candle, and definitely when you say daily candle, at the close of the daily candle per daily cycle, you should know that a previous day high will appear and also a previous day low will appear. Coming to the next day, you find out that price has closed above previous day high. Now you should know that price will be bullish the next day. When a new candle is going to appear, you should know that it's going to be a bullish candle, and this is what refers to continuation pattern. Now if a price is bearish on the daily time frame, you see price has closed a daily range, and you see price leaves you with previous day low and previous day high, and then the next day you see price closes below the previous day low. You should know that the next day candle will be bearish, and this is what you call the continuation pattern. For reversal pattern, you want to see price sweeping liquidity above previous day high if price is bullish, and then price will fail to close above the high, showing a level of reaction back into the range. Now you should know that the next candle that is going to appear, it will be bearish, meaning it has signifies bearish reversal. Now if price is bullish and you see price has taken previous day low, price reacted at the previous day low while it closed inside the range, you should know that the next candle will be bullish. That signifies a reversal pattern. Now let's go back to our Euro USD daily chart and look at this example. So let's look at the two patterns, that is the reversal pattern and the continuation pattern on this chart before explaining how you can trade it. We see price is bouncing off the change in the state of delivery, that is this last down close candle. We see that price came but failed to touch the open of the change in the state of delivery. Now as soon as price touches the open, we see price rejected the previous day low. Now this is the previous day low before the price touches the change in the state of delivery. Now as soon as price touches it, we see price sweep liquidity and close inside the range. This range is from this low then to this high. On seeing this, we have candle 1 and then we have candle 2. As soon as candle 2 reject inside the range, we should know that reversal is anticipated. Now candle 3 is expected to be bullish, and we see price went bullish. How do you know that the continuation is about to happen? Is that price should close above candle 3 or candle 2. Now if this is candle 1, candle 2, candle 3, candle 4, we see that price did not close above candle 2. So on candle 4, we see that price closed above it. As soon as price closed above it, that is above the previous day high, we should know that price is bullish, and the next candle will be continuation candle. So we see this candle 5 here is bullish because it's a continuation candle of the current range. So we see price close above the previous day high. Now when price close above this previous day high, we should anticipate that price will be bullish the next day, and we see currently price is bullish. Now let me show you something. We need to also understand area of validation and invalidation. So if price is going to continue the current direction of the market, you don't want to see price closing below the 50% of the candle, and we see that price is respecting the 50% area. Now this is the 50% of this candle range. I will see price came and did not exceed the 50% of the candle range. The same thing, this candlestick here, we see the price retrace but did not close below the 50%. Now this is telling us that this trend is still valid. So let's go to the 1 hour time frame to see how we can frame our continuation trade. With all being said, let's see how we would have bought this candle. So let's assume this candle did not appear. We have this candle close above this previous high. So this signifies that we have a continuation trade. And the next day, we'll be expecting price to come into the 50% of the previous daily range and expect price to be bullish. And we see that price came into the 50% and reacted from that level. All we need to do on the 1 hour time frame is to position ourselves to see which level or POI the price will come and respect for us to find our trade there. So if we go to the 1 hour time frame, we will have that price has sweep liquidity below this low and we see a bullish expansion and then price closing above the previous day high. Now coming today, we see price tracing back into the range. All we need to do is to identify a fair value gap, a swing low, or any price level that price can easily react. So we have a fair value gap here, and we have a change in the state of delivery at this level, of which price failed to enter into the change in the state of delivery. But observe this. The same candle reversal that I taught you in the beginning, that is what you need to identify on the 1 hour time frame at the point of interest. Now we see here, now as soon as price entered into the fair value gap at discount, we see price rejected. And when price rejected, price closed above the previous candle low. So we have our reversal. And we have seen that candle 3 has closed above candle 2. This shows that on the 1 hour time frame, price will continue. Then from 1 hour time frame, we need to go to the 5 minutes time frame and locate our change in the state of delivery. So here we can see that as soon as price rejected from this level, see price closing above the change in the state of delivery. And all we need to do is to also look out for the same pattern at 5 minutes time frame. Now we are going to be using time to ensure that we are at the right time. So we can on our indicator to tell us at which time we are going to buy. So we see that price is actually giving us our setup at London close, which is a significant time because we see change in the state of delivery. Price close above it and we see these bullish prices, and then this serves as our inducement liquidity because we see a failure swing at this level. So what we need to do is that within the price range, we need to see price sweeping liquidity of this low within the pricing because we don't have a protected low. So since we don't have a protected low, for us to continue from the change in the state of delivery, we need to see price creating a protected low. And what all we had was that price sweep liquidity below this low, creating this as our protected low. So as soon as we see price sweeping liquidity on the 5 minutes time frame, we also have to look at for price rejection. And we've seen it, price close inside the low range, that is inside this low, and price close above it. So as soon as we see this, we can position our trade and enter our bullish trade from this level. Then we can target 1:2.